Hi, friends. Good evening to all our viewers, and thank you all for joining. So, as the name suggests, this is a pre budget. What is expected out of the budget? As a tax saver, what is that we can possibly look at? As you all know, we are not SEBI registered investment advisor for the stock market. However, for the mutual funds and the insurance, I have a very senior person in this industry who's there for almost 8 plus years, who've been taking care of portfolios, systematic investment plan, systematic removal plans, where you gradually know how to also not just invest but also regularly take money out and take care of your day-to-day expenses. So I have Mr. Sunil Abraham, who's a very good friend of ours, and who will talk, who will also help us guide us how we could exactly look at investments, how the pre-budget, I mean the budget for 23 can affect or which industries we can look at. So I have Mr. Sunil, please do join us. Thank you all for joining.
Hi, this is Sunil. Actually, I'm glad that I'm a part of this talk, and pretty interesting. This morning when I was having a discussion with Hemant, I happened to hear that he's putting a pre-budget plan, and I think probably even before Sitaram had would have planned it, I think Hemant planned his table of discussing this, and it's pretty interesting that we are going to talk about a subject which is certainly a very huge topic, and it goes probably over a month and above in the center, right? So I think we are not the experts in everything, but then certainly we have experience as taxpayers as a major factor into deciding as to what probably would go into the future, aligning with the GDP and further aspect of how this entire country works. So this is just going to be our views. I mean, do not consider this probably as something where you can take decisions in terms of investing or those kind of things. So we thought, okay, we'll spend probably like few minutes on first of all introducing as how this entire thing works in terms of budgeting, and many of you viewers would have already experienced this in the past years, how this tax does have an impact on right from the stock markets. I have at times when crashes would have been like as much as 1,000 points in a day, and it's not surprising it can happen with policies over an FDI investment, or probably where we're talking about interest part of it, or where the common man cannot see much of benefits coming in for middlemen or lower class, right? So before we get into any of these, I think one of the first things I would like to cover is the fiscal policy itself. For I know many of you guys on the screen or probably in this chat would be familiar with the fiscal policy, but I want to give this as a very brief introduction to what this budget is all about, and also covering the fiscal policy scenario for India, right? So let's. This is for people who are very new to this and probably would be interested to know about it. So I'll keep it very simple, so it can be absorbed in a very little sense than going too complex over economics and stuff like that. So fiscal policy is one of the biggest derivative in terms of how this entire economy works. And certainly, if you look at it, I mean, we're looking at two major subdivisions of it. One, we can call it as the revenue aspect, and another one is the expenditure part. So, for any government, any economy, the first thing that comes into the minds are how do we really make out the revenues for an economy, and that's where you have taxation, which we are very familiar with, at least with direct and indirect taxes, we are very familiar. And for India, as such, if you look at it, I think it is in the range of 15% on a direct tax. And we are also talking about an indirect tax, which is nothing but around 16%. And this mostly comes in the goods and services. As you know, the GST got introduced in India, and this comes to 16%. And as we also get to know about borrowings, every country will have a certain amount of borrowings, and this has to be really, really controlled within any economy. This is primarily to ensure aspects like where a company's credit rating does not get affected. So that's the reason why many of the countries keep this on a very tight control in terms of borrowing. At least for India, as I recall, is around 38% in terms of the borrowings. And this plays a very vital role because, in a form, when we talk about expenditures, one of the things we return back is nothing but interest on the borrowings. And that's primarily going to be a huge chunk if our borrowings are going to be a large amount, right? So these are external borrowings that we go through soft loans, and also we are talking about those country specific loans that we pick up at the national level, right? So 38% is still a good chunk. And if you look at it, if I recall it right, I think from the last year, we are almost having a deficit of another 10% increment. So that's a huge chunk we're talking about in terms of the borrowings. And does it affect our credit rating? Well, it is a very complex subject in itself because there are economies who dissolve at a higher rate of more than 60 to 70%, as you would have seen in case of Afghanistan, or probably you're talking about Sri Lanka, or maybe Pakistan, as you can see now. So this needs to be having a tight control. So how does it really matter for us as individuals? How does borrowings have an impact? If you look at it, I mean, the more the borrowings, the more the payouts in a future date for the countries. And mostly, a country to survive has to have good credit rating, whereby foreign investors would make investments in India if their credit ratings are good enough. And so does the borrowings. In dire needs, we might have to extend ourselves for external source of funds, and we need to ensure that our credit ratings are good enough. So the primary control point for any economy is going to be to look at how these borrowings are controlled, and certainly when these gaps go up, it also calls in for some controls by the government to bring in some regulations around it to pay off these debts much in advance, so that even our budgets would be streamlined around it. So most of the scheme subsidies will have to be reduced. Other things will also get impacted because of these. Other things, if you look at it, where it contributes to revenue is the corporate taxes. So in India, as such, is same as almost 15%. We can say more like the direct taxes what we pay today. But again, the quantum would be higher than what we might extract from an individual, right? So that's something which like puts forth to the kitty of the Indian government. Then comes the next part where we're talking about expenditures. This is very interesting because, again, if you look at it, there is several schemes under which you would see, like the Pradhan Mantri Yojana and other schemes that we get to see. These are like centralized schemes, and which comes to almost 5% as what it is today for expenditure. The largest chunk today is, again, as I mentioned earlier, is on interest on borrowings, which is almost 20%. So that's why I said why it is important to have a tight control on the borrowings part. And other defense is 5%, and subsidies, as you see, for mostly these agriculture, and probably even now that government is going for Make in India programs. I think this also contributes to a lot of subsidies for towards this industry growth aspect. So these are the expenditures, apart from what other bearings are primarily on infrastructure development and other um, aspect of it. So how do we really control these aspects? Like, for example, if the expenditures need to be really curbed, there are chances where we see mostly disinvestment in PSUs happening, as this would have been seen over the last year as well. And Air India is one of those which you would have seen, and some of the banks which have been also in the talks now, as SBI and other stuff. So this disinvestment is something which is very much coming up as a topic, and I think this will be also part of the budget discussion because of the 10% additional deficit we are seeing this year. So that's one thing, and the other part is we also need to look at what happens if these deficits grow. We end up paying more taxes. So that's one of the things. But uh, we can't call that out very specifically unless probably there are other budgetary measures to be taken by the finance minister. But then I think it is very interesting to uh, see that how we have an expectation this year, as we say that from the last 4 years there has been no revision in the ATC bracket or ATD brackets, and we have been looking forward to this change. And I think will this budget contribute to that change? Big question to ask. So let's look at it. I mean, it will be interesting to know. Certainly, there has been a survey already rolled out by the finance teams, I think, across. And this was, I think, if I recall, it was from Economic Times or some other body who had rolled out this survey across India. And very interesting to see what they were looking at. One was ATC, where it is 1.5 as the bracket, and where people were expecting somewhere in the range of 2 to 2.5 lakh of exemptions that they're looking at. Second part was the 80D, which was another interesting part, which today, if you look at it, is 25 to 50,000 and can go up to 1 lakh. And people are looking at almost 1.5 lakh for the coming budget. But will that be provided? A good question to ask again. So these are few things which we are looking at from a salary perspective. Apart from that, if you look at it, we are also looking at what are the other benefits, like in terms of work environment with the hybrid culture coming up. Is there going to be any additional benefits given to the employees? All those things are big talks in the corporate world. So we will see something around that in this budget, around the hybrid working culture, some kind of perks around it, which will not be taxable. And very interestingly, if you recall, I think we are all under the scenario. We are all under the scenario where we have faced two schemes for the taxation, as you know, the old scheme and the new scheme. Question asked by many of my colleagues and my friends were, should I opt for the new scheme or the old scheme? And this always reminds me of one single thing that we had earlier, some subsidies for our um, gas, as you know, and how this subsidy was lifted in a later scale. So, what is this new scheme about in terms of taxation? So this new scheme is all about making sure you get a lesser payout on your bracket of tax pay, but also giving off all those exemptions which you could get from the old scheme. So many of them are still stuck to the old regime of taxation, wherein they can benefit from that ATC or ATT and all those deduction exemptions that we can get from that particular old taxation scheme. So I think one of the biggest directive this year I look forward to is that though our expectations are to get more on these exemptions, but I think there could be some directive in terms of also looking at whether the new scheme can be fully implemented across India. So that's going to be a big game changer and probably a disappointment if this is going to be happening for individuals like us who are salaried or probably who are in the working bracket. So let's look at it. I mean, how this will impact. Probably we are keeping our fingers crossed and seeing probably we'll get some benefit in the old scheme with an add-on, and or probably it could be a slab shift where we're talking about 10 lakh not paying 30%, but going to a bracket of 20 lakh and up paying 30%. So that's going to be something which everyone is expecting and hoping. So let's look forward to it. And apart from that, I think how do we look at our investment side of it? I mean, there are many, many things that we can use to benefit in terms of taxation. As I was discussing with Hemant also today on that we can look forward to investments in certain mutual funds, or even there are a lot of schemes that we can have in terms of types of funds that we can invest in. to avoid, probably not to avoid in the sense like we can make proper tax allocations and benefit from this structure. So I'm thinking probably this one session will not be enough for taking it forward in terms of all those specifics, may it be SWP or SIP schemes or maybe LSS or many other things that would love to discuss as I do with many of my colleagues and friends. Probably we'll take it forward over the next call, but I think this could have come as a small thinker or probably a bell to remind that our budgets are around the corner and we might look forward to hearing more often on this around. So thank you for your time, and I hand over to Hemant over this.
Thank you for your insight. Couple of questions we have from our viewers. I have Mr. Vikas who is asking us, how do you see public sector banks, Reliance, etc., post budget, as it seems to be a populist budget due to the elections?
Yeah.
That's one question that we have. And is it a good time to invest in public sector banks?
Yeah, like I mentioned earlier, that there is a potential that even there could be disinvestments in public sector units, wherein maybe private bodies taking over these public sector units. It will be also dependent on factoring the credibility of these people who are taking up the private sector units. So primarily, it will depend on their performance, their strategy, and further allocations in terms of business side. So I would not probably take a risk at this point to go for a PSU investment or those kind of things. But Reliance, as we know from our grandfather days, that this has been a parallel economy to India. I think you would not see a major like threat into investing in something which is already proved as a blue chip or the top tier investment criteria. So I think I would always suggest two parts. One is where there is an investment part, which could be a long term, where you need to look at somewhere more than 10 years, ideally for a stable kind of return, and where your possibility of losing is less than 3%, right? And there are different brackets under which we need to know, because stock markets work in cycles of 3, 7, 10, and 12 and 20. So based on that, if you work out, I mean, the least that you can lose is post 10 years. So if you are looking for a long term investment sake of it, I think it's not a wrong idea to put yourself up in for Reliance. There's a lot of things changing for Reliance as well internally in terms of um, probably it's about who holds the reins now within the family. So we'll have to look forward to that as well. And with the 5G getting introduced, I think Reliance will take a complete different spread. So we'll have to look and watch for a while before we really dice in for that investment. But in terms of the PSUs, I would not be really. That's my opinion. I mean, I will not be investing at this point of time unless I get a fair picture in terms of where they're heading. Yeah, that's
Absolutely. Thank you so much for answering these queries. I would also go by same, I think the same what you echo on the same, because the Reliance, if you see right now, seem to be on a downtrend. And public sector banks, yes, they are a good investment for a long term perspective. However, before we invest, it is always better we wait, pause, observe, think. Once we get a green signal, yes, you start. And once you start, you should not stop. That's how an investment is made. And right time, yes, we would definitely have a good time to invest, but let us wait and see how it goes. And what do you feel long term perspective? Is this a good time to invest, or we should wait, or is it a bad time? What do you feel, sir?
is that for the general market sense
General,
of it? Yeah.
long term
So I
perspective.
think investments into equity purely, I mean, if you look at it, is never going to have a big impact or blowout as you see in. See, we have to understand this in a very simple fashion. Now is where you have an investment in multiple buckets. Like you cannot keep investing in either an FD or just sit around the corner and say, I'm going to make a good amount of money of FD anymore because the interest rates are high. But this could change with the inflationary measures. It can be changing with the interest rates and many things around. So that's a short-term perspective. But if you look at it in long term, I would say investment in equity has never failed. And only for the reason like I mentioned earlier, anything about 10 years has already a proven track record of less than 3% derailment. So that's a good percentage when we talk about an investment aspect of it. Now, second part is there are people who ask me this question very often is, do I invest today? And especially in case of SIPs, like they ask me, do I have to hold my investment of SIP this month? Or should I invest next month? What do you suggest? So I normally suggest one thing. You should remember, especially in mutual funds, in specific, I hear this. Should I hold this? So I normally suggest to them is it directly is invested into the markets, right? So first thing you need to understand is as the market falls, you're getting more units as you're buying at a lower rate. So I think that is a sound idea that as the market rises, the same component is going to produce more in terms of its revenue, right? So I would say that's a time when you need to buy more rather than stopping it and waiting for the prices to hike. Now, why in mutual funds you do not need not worry that much in specific is because again, very specific thing is that these are done by fund managers who have very core experience in managing maybe any kind of funds, like about you have the large caps, the mid caps, or the small caps, or even there are today many options available where if you need a sectoral fund, you have an option in that as well. If you're keen about also doing based on certain solutions that we need to have, like for example, for a marriage, or probably you need to plan out for your education. So there are certain strategic funds that you can put up, which will help you. So how do you mitigate this? Now there is another strategy to that as well, which I normally share with my friends as well as uh, you need whenever you invest, you have 100 rupees with you. You're not going to invest all the 100 into mutual funds or the equity. You need to hold back 25%, and that 25% you're going to largely invest when the markets are down for buying in the extra units, right? And that's when you really get that extra spike. And that 25% has to be retained as and when you make that extra buck out of that gain, right? So that's one core strategy I follow personally, and it makes wonders. So I think anytime for equity markets, I'm pro. I mean, I always believe that if that markets fail, I mean, the first thing you will see is there is hardly any existence of the economy as such, because majorly if you take any institutions that invest today, like banking, or maybe even if you take any investing house, they will be having equity as the backbone of it. So that will never have, it can have setbacks, but it doesn't mean it can have a implication which can be a meltdown situation kind of thing. It will be always retained, and that's one of the backbone for our economy as well. Yeah. So I think to answering to your question is go forward with investment, but make sure you invest right. Do the fundamental analysis if you're doing it on your own. Make sure you're aware of the markets. You're aware of the sector specifically. You're aware of the company. Also, who are the partakers? Who are the biggest investors in those? Try to understand those. Do the basic analysis in terms of all the metrics for the fundamental analysis, then you're good to go with any good companies or sectors. Yeah.
Good, good. Yes, I think valid point. One point, I think, yes, as you said, when the market falls, is that's the time you need to invest more because you get more units,
Yeah, absolutely.
right? That's what I think is a very, very wonderful point, valid point as well. I have our good friend Mr. Ankur. Uh, what are the good avenues to invest other than the stocks and mutual funds?
That's a big. I mean, that question needs almost 2 hours of pounding. I mean, if you want, you can probably connect one on one for the discussion. I mean, it's a big topic. I mean, it revolves around a lot of areas. Like one is, what is your risk appetite? What kind of investments are you primarily currently into? uh, what is the stake that you would like to have? Like, I mean, based on the risk, right? I mean, the more the riskier the instrument, the more chances you have. There are also alternative fund options that you can have, the AIFs, which we talk about, or retail investments. So, are you willing to take those risks? So, I mean, by large, what I normally suggest is spread your basket into multiple investments. Also, keeping into account some for a contingency fund you're planning, which is very essential, up to 25%. And the remaining you can put across based on your risk appetite. So, I mean, today, if you look at it, the market is so large. And today, by large, if you look at it, apart from just the Indian markets, you have also the potential of investing in foreign markets. But then I always take that with a caution is unless you are really risk high, I would not go for a different market where I don't have a prevailing idea or a clear idea about the company's operations, and also considering the tax structure and other aspects of it. But today, if you look at it, primarily you have alternate investment funds, then you have mutual funds, you have real estate investments, gold, metals, other metals, plenty of investment opportunities that you have, and that's why we are in picture to make you the best options and spread your basket and make you some good money. Yeah,
I think I also want to add here, uh, all avenues are good to invest.
yeah,
It's only the time when we invest, we need to understand when to enter, when to exit.
absolutely. And the returns as well. I mean,
Yes.
what is the percentage of returns that you're looking at?
Yes.
What is the
Yes.
period?
What's
Yeah.
the period of plan?
Yeah, exactly. It's purely goal based, and that cannot be just answered over a question. But I gave you what all you can invest primarily into multiple
Yes.
baskets. Yeah,
And it's never late to invest.
never late.
I remember seeing one. I was reading an article today. There is a company there is a village in Maharashtra, which I think that is where Wipro started off. They were doing deliveries of rice bags or something like that, and they persuaded those villagers to invest in the stocks, in Wipro stocks. And now you know where this village could be. I mean, the villagers who are invested with all those dividends, bonuses, and all that. So, right time, right companies is where we need to choose. And when we feel it is wrong, it's okay. We have to take failures in life, exit, and look at better avenues.
Yes.
So, nevertheless, good question. I think we have about 15 odd people joining us. I think we will have another session if all of us are keen. And please do like and subscribe, do share. Maybe we will have another session uh,
Same time next
next Sunday.
next Sunday.
Before the budget. We'll have, so we'll also have a clear picture or some ideas. Maybe we can share some, uh, maybe some stocks which you can do a SIP.
Yeah.
We can also share that. Uh, so thank you all for joining. Thank you for your time, Mr. Sunil.
Thank you.
And is there anything else you want to add?
Uh, I mean, it's all about, like I mentioned earlier. I mean, there is two parts to it. One is where we say you have like this is primarily because I have lost money in the initial stages when I started off in this journey in terms of trading, and do I stop from there? No, it is about you, how you want to maintain that, how you want to learn out of that. It's just like you invested in a university and probably learned something out of that experience. So, nothing to be dejected about your failures. There is nothing like a perfect scenario in this world, maybe in business, in work, or in investment. So, one thing I always tell my folks is do not get really carried away by these sudden drops or newses and get challenged by that. Rather go by two aspects. When if it's investment, go by fundamentals, and if it is your trading, go by your simple system, which is systematic. We will also cover a topic on that in the coming days when, if given a chance. So, which will also showcase how we can be more systematic in terms of your trading, how we can make that little profits and systematically earn a living out of it. So, we'll cover that probably sometime in the future. So good luck with this budget. Good luck for all of us. We keep our fingers crossed for that change to happen, hoping that like I think who was the one who mentioned about this one specifically in terms of next year being the election year. This should be an interesting one. No,
Vikas.
Vikas, yeah. So as Vikas was mentioning, it's a good question. In fact, even I have a feeling that this would be a popular budget for the reason that they have elections coming next year. So it should be somewhere around the middlemen and also the smaller strata of the society where this will be focused. That's my understanding. So there should be some good benefits in terms of tax structures and other things in the salaried perspective. So let's hope for that and wish you the best and have a good evening. Yeah.
Thank you. Thank you all for joining. Mm, Good day to all. And thanks all. Thank you so much for joining, all of you. Thank you. We will also have a session on how to trade F&O, maybe by say around 7:38. Please do join. I will share my link, of course, and God bless you all. I hope that's all for now. We will have another session same time next week. Possibly we will try to have more of sessions like this on how to do systematic investment plans, mutual funds, all that. Because all the time, I think I've been always focusing on F&O and stock options, index levels, and etc. So we will have this session.